for guessing that the top gainers on the indices are all largely on account of the oil and gas space, the drop in crude that we saw overnight. So HPCL, BPCL, ONGC, Indian Oil Co-op, and of course a lot of your paint stocks as well, which do have an exposure to oil, all advancing in trade owing to the fall in crude. UPL also up 3%, and we do have some gains in HUL and Ultratech Cement. On the losing end, Sun Pharma bearing the brunt of poor earnings coming through for the second straight day. We have seen declines of over 5-6%, and of course that was followed by weakness in the IT sector. So you do have the likes of Tech Mahindra, HCL Technologies, TCS, as well as Infosys to a certain extent declining in trade. Mahindra and Mahindra also declining by 2.5% on account of earnings which came towards the last hour in trade today. But when it comes to the broader markets, on the NSE 500, we have one gainer for one loser. Tata Investment stands right at the top, gaining 14%, followed by Adani Transmission. Dilip Bilkon, well, poor earnings, but that hasn't stopped the stock from climbing nearly 10% in trade. Interglobe Aviation, along with some of the other aviation names, also advancing in trade, once again on account of the fall in crude. AU Small Finance, Future Consumer, among others, which are gaining in trade. Ashok Leyland, of course, poor earnings, and its head also will resign eventually by the end of this financial year, and that's the reason why we've seen the stock take a hit of around 10%. Motherson Sumi, once again poor earnings coming through. Deepak Fertilizers, Indoco Remedies, and Rain Industries, among many others, which are losing out in trade. But what do you do with technicals at this point in time when it comes to the benchmark indices? This is what some of the technical analysts are telling us. Listen in.
Post a very good move. I think the markets are currently consolidating its gains. There is a good intermediate low already in place, and the recent decline that we've seen, I think the correction is mostly done. So on the lower side, I think it's important to see whether we'll hold the short-term support areas, and once that confirms, we will eventually start moving on the upside. So on the lower side, 10,400 and 10,450 are the important weekly support for the Nifty, and as long as these levels are held, I think it definitely indicates that the markets are trying to form a higher base, and eventually we maintain our upside targets of close to 11,050 levels for the Nifty.
Banks is where the action is. I still think we're kind of headed for much higher levels. 26,800 to be precise is my Bank Nifty target. There is some near-term resistance at the current level, or closer to 26,050 on the Bank Nifty spot. But I think that having cleared through, we should clearly move to 26,800. 25,600 is a clear stop loss to work with there.
Right, then let's address some of these big movers in today's day of trade. And Mahindra & Mahindra came out with its earnings, after which we did see that stock decline to a certain extent. We have Yash Upadhyay, who's joining us to give us an update on the same. Yash, it's over to you.
Magam, the numbers weren't that bad actually. An inline set of numbers. Revenues grew by about 6%, coming in at about 12,790 crores, bang in line with the estimates. Net profit saw 26% growth, aided by another income element of about 134 crore rupees. Operationally too, the numbers were in line. Margins, they contracted by about 150 basis points, but that was on account of lower tractor sales, which fell by 5% in the second quarter, along with higher raw material prices. As far as the management commentary is concerned, the management says that it would be difficult to post double-digit volume growth in the automotive segment post the festive season, and that there could be concerns with respect to margins on account of the higher raw material prices and with what the crude would do. Right now the crude prices have softened, but going forward that uncertainty remains. But overall the numbers were in line, but we saw a bit of a stock reaction down close to 2.5%.
Right, Yash, thanks for joining us and getting us those updates. But of course the main point of discussion in today across markets was the fall and the sharp fall in crude overnight, and that has impacted many of these sectors out there in the Indian markets as well. And we have Somit Sarkar, who's joining us to give us an update on the same. So Somit, what do you have for us?
Well, if you see, crude prices are down nearly 21% from their highs, and this has directly benefited the oil marketing companies. You can see how they have gained in the same period close to 19 to 48%. So that's the kind of gain that we are seeing for the oil marketing companies because of a 21% drop in Brent crude. Now, why is this? Because this steep fall in crude prices will increase the oil marketing companies' ability to hike the gross marketing margins. Now, earlier we know that government had asked them to bear that 1 rupee impact because of rising crude prices, but because of this fall, now they can pass on the impact to consumers and increase their gross marketing margins. In fact, if you see this rise in gross marketing margins is already reflected in the prices. Now, in November, according to data compiled by Bloomberg Quint, the margins have bounced back to 3.5 rupees and 2.5 rupees on every liter of petrol and diesel. Now, this is after a weak month of October where they were asked to bear this 1 rupee impact. Now, which company does benefit from this rise in gross marketing margin the most? Well, it will be HPCL, and you can clearly see how HPCL also gained the most among all the three oil marketing companies. HPCL has gained nearly 48%. Now, the HPCL benefits the most because the marketing segment contributes nearly 60% to the consolidated EBITDA of the company, and that's the reason the company benefits the most.
All right, Sumit, thanks for joining us and getting us that update on OMCs as well.